In this episode, we're going to run through exactly how the Right to Buy scheme works and why, in my opinion, it's one of the best schemes to purchase a house if you're in a position to do so. Let's go. So, Right to Buy allows council tenants to buy their council home at a discount. The first thing you need to know is how you qualify. You must have been living in a council or public sector house for 3 years, but it doesn't have to be 3 years in a row, just a minimum of 3. The longer you have lived in the house, the higher the discount could be, and you can get up to a £96,010 discount, and even more if you live in London. Let's say your council house is valued at £250,000 and you're eligible for the full discount. What this means is you're now eligible to buy this house for £153,990. Here is where it gets really interesting. Because the market value of the house is higher, there are a lot of mortgage lenders out there that will allow you to mortgage for the full purchase price. The reason they can do this is because they have the reassurance of the £96,000 equity still left in the property. You can put down a deposit if you want to, and this will reduce the amount you need to borrow, but you can buy this house by putting down zero money as a deposit. You'll need to make sure that you have enough money for solicitor costs and possible mortgage fees, but this is still a fraction of the cost of buying a home in the traditional way. Okay, so what's the catch? The only catch is that if you want to sell the house within the first 5 years, you will have to pay back some of the discount. If you sell within the first year of owning the property, you'll have to pay back 100% of that discount. In year 2, it's 80%. In year 3, 60%. Year 4, 40%. And in year 5, it's only 20%. Another downside is if you try and sell within the first 10 years of buying, regardless of the discounts mentioned above, you must offer it back to your old landlord or another social landlord in the area. If they don't agree to buy within 8 weeks, you're eligible to put it on the market and sell it to anyone. Another thing to bear in mind is that a mortgage for the discounted price could well be higher than your rent. Even with these restrictions, as long as you keep the house for 5 years, you now own the house and have a ton of equity that you didn't have 5 years ago. There are a number of other factors that can affect the discount that you get, like how long you've lived there and how much the property is worth. I'll put a link in the comments to the government site that will take you through the eligibility so you can see if and how you can apply. There are plenty of other details involved with mortgages which we'll be covering off in future videos, so make sure you follow the page for more mortgage content.